Hello, 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 hello. What's going on, everybody? Welcome to our stock trades. How you doing, B-Rad Cooley? You know what, man? I freaking love that you're always the first one here. You know what, man? You always brighten up my day. I can't say that more than enough, right? So, drop that freaking beat, penny stock. Oof. Yeah, we're gonna talk about that 2025. Let's go. All right. So this video is gonna have a lot of stuff. Oh my god. I wish I have an AI can just basically talk for me, but you know that you got to say these things because these things are important. Okay, so all right, I'm a little antsy because I didn't swim today. I'm gonna go swim after, right? You know, when you don't work out, you're like, oh, I gotta work out. Okay, so we got an article here from Insider Monkey, right, to say, is Clover Health Investments the best penny stock to buy for 2025? Now, here's the thing. I don't like the term penny stock because, again, Clover Health is a $1.6 billion market cap. And if we talked to our AI, and it basically agreed that this is not considered a penny stock. It is considered a small cap stock. The reason why people are saying it's a penny stock is because it's under $5. But here's the thing. Ken, I definitely understand. Shake my head. But here's the thing. This is going to sound sad, but it's really the truth. Let other people's stupidity be your advantage, right? So, let other people's, I guess a more professional way of saying it is let other people's ignorance be your advantage. And the reason why I say that is because, what happens when Clover goes back up to $10, right? What's going to end up, or sorry, what happens when Clover goes back up to $5, what's going to ultimately happen, right? Then all of a sudden it's not a penny stock. Oh my God, it's a real company. In fact, there's a lot of things that I'm going to be talking about right now. I'm going to mention this really quickly so I don't forget. Make sure I mention this. So if you go to Reddit, I recently got this comment the other day. Here it is. Someone said and I think I posted this regarding how Clover Health is ranked number 1 in the industry. And then someone basically commented and said, sure, let me know when the stock crosses $10 a share and I will buy in. So again, obviously this individual doesn't have an understanding of the equity markets, doesn't understand, well, if you buy at $10 versus, so let's give an example of someone who bought at 60 cents versus someone who buys at $10, because ultimately this goes back to what we were talking about earlier on. Remember I told you, if you look at Max right now, and let me just go ahead and zoom on in here. If you look at Max right now, guys, and ultimately look at Clover Health, the Max is around $10, right? So ultimately people think that this is a bad company. It's down 69%. They don't understand that what they did here, they $20 million share repurchase buyback program, about $2 million from Vivek from insider buying, CMS 4-star ratings, operational free cash flow and free cash flow positivity on a fiscal year basis, hopefully in the next Q4 earnings. So you could see basically a lot has happened here, but they just see this, right? Because again, this is what dumb money does, right? Year to date, people that are intelligent investors, we basically see this, right? We see 228% because there has been a change in the fundamentals, right? Now, if you go back to the Max, what's going to end up happening is once this thing gets to $10, it's going to almost be like a Palantir effect, right? Once it gets to $10, people are going to be like, oh my God, this thing's going up. This thing's going up. And that's what happens. Palantir used to be around $10 here, and all of a sudden it rebounded and it went up to 75. And people like this gentleman here are going to end up buying at $10. But here's the thing. If you invest $1 at $10 versus $1 at 60 cents, you would end up basically almost 20xing your money. So you can ultimately see that, right? And here's $10 is the resistance. Oof, definitely going to hit head a bit there. Exactly. There's going to be a big resistance there, right? But ultimately, you can see kind of the mentality people have, right? But here's the mentality now. The mentality shifting, right? There's a lot, again, here's another article. Again, this was posted January 1st, 2025. Already we are the first day into 2025, and we already got 2 positive articles for Clover, right? And here's another one that was published again, January 1st, 2025, right? And you could see the positive aspects of how they define Clover. And more specifically, if you were to go down here, and this should probably get you excited, go here, look what it says. If you're looking for an AI stock that is more promising than Clove, but here, cheapest AI stock. So, okay, sorry. So it's saying, my apologies. If you're looking for, so you see how they gear you? If you're looking for an AI stock that is more promising than Clove, you see how they're grouping it up as an AI stock? Here's another one. AI-powered software platform. It's AI, right? You can see how the word AI now is used a lot. Let's go ahead and see how many times they used well, it's hard to see because we can't. Yeah, it's bad though. Control fine here, but you could see they say AI. They're grouping it in AI, and like I said, we had two articles already that are bullish for 2025. And like I said in my analysis that I did, you could see again, this analysis was done before 2025, January 1st. And you can see how if this is the neutral rate and this is the bearish rate and this is the bullish rate, you can see the articles in terms of the net positivity is increasing rapidly. So people now are more bullish on Clover. And ultimately that's going to create a positive feedback loop. And you're seeing that this trend is real, given that these were just posted today, right? So now, given that we went ahead and talked about this trend and did this analysis, we were technically in a bearish area here. Now, I went ahead and did my year-end analysis, and I found something interesting. I went ahead and posted this interesting comment on Twitter. Now, a while ago, there was a gentleman by the name of No Distribution, right? That's his Reddit tag name. And 7 months ago, it was when Clover dropped down to 99 pennies, 98 pennies, right? It dropped under $1, right? 7 months ago. So let me just show you here, because sometimes it's easier to go ahead and just show you. If you go to Clover, and if you were to go to the year, and back in 7 months ago, it dropped under $1, right around here. You see how it dropped to 99 cents? And, we were saying, yes, this is an opportunity. It's an opportunity. Again, not financial advice, but this gentleman here said, please, period. No one post about how this is so great and you are going to accumulate now that we are under $1. This is complete BS. And the company let us down today. Again, a lot of folks, again, why am I talking about this? Well, Steve Jobs, one of the greatest investors, or just one of the greatest CEOs of our time, he basically said that you cannot connect the dots looking into the future. You have to connect the dots looking at the past. And this is a great example, because we're going to get bearish posts like this in the future, right? People like this can give us experience, right? So this individual, pretty much said, this is complete BS. The company let us down. Again, a lot of just uneducated remarks here. The company has nothing to do with the stock price, because there are differences between primary versus secondary markets. And again, part of our Mastering Stock Market course, one of the lessons that we teach is the differentiation between these two markets. And this gentleman doesn't understand that these stock prices are not exhibited by the company themselves. Technically, Clover Health evaluated themselves at $5.75 2 years ago, right? When they didn't have what they have now, right? So ultimately, there's a lot of uneducatedness here. But the biggest thing I want to talk about is this individual represented one of the graphs that we talked about regarding dumb money and smart money, right? So if you were to look at this individual 7 months ago, he obviously says no one post about how this is so great and you're going to accumulate now. So obviously this guy was a net non-accumulator, essentially does not like the price at that levels and did not want to buy. And if you were to go ahead and take a look at the stock price when it was trading at 99 cents and looked at his essentially dumb money signal, you can see that this basically gave us a 218.18% return, right? This is, and if you go to from the peak, it gave us a 336.36% return, right? And the sad part is, if you were to analyze this guy's posts, his posts are quite weird in the Clover community, and it's just continuously just I feel really, again, this gentleman is operating with a Windows 95 processing system in his frontal lobe, and it's sometimes like our systems are integrated with NVIDIA's GPU sets that are advanced and algorithmic, and sometimes it's very hard because you can't help no one. Again, if you tell a fish that it can climb a tree, it'll think that it's stupid its whole life, right? And I get it. There's people that exist in the world that cannot be investors, and I get that, right? Because you have to have a certain type of mentality as an investor. But again, I say this to you all as an educational perspective, because this is the first time we can use social media as a way to learn from other people's experiences. This is such a great post by this gentleman, and I praise him for actually being part of our educational process. He serves as a good indicator, which brings us now to smart money, dumb money. Okay, so now basically, if you look at the smart money, dumb money confidence spread, the way this is calculated is if you have over $100 million, you have to basically formulate an SEC 13F filing, which is a filing that is basically, you have to disclose what you own. Now, the problem is, how do we get dumb money? Well, dumb money is people that have under $100 million. But the beautiful part is your brokers, because you have under $100 million, they sell this information. And people like us are able to take this information and essentially graph it and make money off of it. So essentially what you see here is that since the market have been going down right now, dumb money has been waiting for this. Dumb money, if you haven't realized, has been down for since November. They've been going down, 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 down. And now finally we have a cross. And now smart money is accumulating and essentially buying the shares that the dumb money people are selling. And it's very funny because if you were to analyze this individual, he actually started talking again in Clover Health, right? In the Clove chat. And this guy's honestly a great indicator. Now, since now, if he watches this video, I assume that he's no longer going to be that indicator. But you know what? Maybe this is great for him because it'll be an educational process for him. And perhaps maybe synaptic plasticity and long-term potentiation may play a role in his hippocampus, and he may actually start learning something, right? But overall, from this, you can basically see in action the graph here and representation from the human perspective, which is why I love neuroeconomics, how essentially the microscopic levels represents retail individual investors, but ultimately can culminate in a behavioral pattern and change that can be mathematically modeled and graphed, and it can make money for people like us that are educated, okay? All right, so as you can see here, right? So now we can go ahead and go, oh yeah, Jordan, my apologies right now. I went in really heavy right now on neuroscience. I went in really heavily. I went in really hard right now. My apologies, right? Right? I pulled out a dictionary. I needed help. My apologies. I went complete neuroscience on you guys right now. But again, I find this very, very just so interesting because, guys, listen, if you go to I'm going to spell this wrong, neuroeconomics, the first thing that comes up is here. What is neuroeconomics? They have a class at this at Yale. Again, what I'm trying to show you guys is top Ivy League material, but essentially we can make money off of this type of material because this is what the stuff they don't want you to know about. Okay. All right. So now we go ahead and analyze this. And I really feel, I'm sorry. Like, I'm sorry if this was the biggest roast, but again, this is, it's okay, right? Because again, it's just the right handle, right? Nobody knows, right? Okay. Right. Let me see here. Should be getting PR about partial guidance between now and the 10th. Toy will be on the JP Morgan conference on the 15th. I think JP bought back in. So if they finally bought back in, that's great. Al, Happy New Year. And the Oracle from AZ, all my ALSD fam, what's going on? Synaptic plasticity. Wow. Jordan, you have to give me more than that comment. Can you give me a little bit more? What do you think about that comment? Was that a little too much? Give me a little bit of your opinion. You can't just basically leave me hanging, right? You can't just leave me hanging from that, right? You got to help me, right? All right. So I pulled out a dictionary, right? What's going on, B-Rob? Again, this just serves as an educational way of looking at things. Okay, so now smart money's kicking back on. Now give me a moment. Let me sip on this coffee. Hold on. Oh, I'm still processing it. I'm so sorry. I'm so sorry, brother. I'm so sorry. All right. Okay. All right. For folks, I went a little too fast on that one. For folks, you may have to repeat that a couple of times. I spoke really fast, and you're going to have to probably slow it down. I'm really, really sorry. But I got really excited because obviously I love this. I mean, do you blame me? I got one of my degrees is in neuroscience, right? I love the brain. And we just basically mapped out how money is being flown by someone's emotions. Holy crap, right? This is just amazing, right? I mean, come on. Oh, this is like, I feel like, I don't know, man. I love this. Okay, so now, I got to slow it down. My heart rate's elevated. Okay. Such a freaking nerd, guys. I'm such a freaking nerd. Whew. All right. So now let's go ahead and zoom in. Okay. So now let's talk about our portfolio hedging modeling system. Okay. This is our overall performance. Okay. So if you don't recall, I released these stocks earlier into the year because Clover wasn't doing that well. I said, you know what? Let me go ahead and release this. So every year we have, again, none of this is financial advice. None of this is financial. I know, right? It's 9 p.m. easy on the coffee. Actually, it's 7:19 p.m. Arizona time, baby. Right? I still got time to sip on that good old the elixir of the gods, right? Okay, sorry. I'm so really excited. Okay, so all right, so portfolio hedging modeling system. So again, not financial advice, right? Sorry, I get too excited. So yeah, so this is stocks that we pick, and it's a proprietary way we find it. We go ahead and release it on the stock terminal. Okay. I'm going to tell you the overall performance, and we're going to do a couple of analysis. So if you look at it from the passive perspective, from January 1st or 2nd, whenever we released it, if you overall, I think it was January 2nd or whatever, we went ahead and looked at the performance. The S&P 500 is up 23.31%. Our portfolio hedging modeling system is up 26.17%. We won. Our portfolio hedging modeling system won. But here's the catch. There's a catch to this, okay? Many hedge funds hold the companies included in our portfolio hedging modeling system. In the next analysis, we will calculate the annual highs for each individual stock and assess the overall return. This will likely show higher performance than previously discussed. Let me give you an example. HCA stock was previously up 50%. Now it's down. FI stock was currently up 56%, but now it's down up 56, but now down from 67%. Chipotle used to be 52%, dropped to 41%, right? Bro declined from 60% to 46%, right? Wingstop used to be 69.55%, now it's 16.89%. Fixed stock decreased from 149% to 127% increase. So let me give you an example of what the hell I'm talking about here, okay? So let's say you like Wingstop. Wingstop. Hello. Wingstop stock. If I say that 5 times. The problem is it's only up 12.6%. But if you look at it from when we called it out on, if you go all the way up here, it was actually up 6. Let me zoom in. I mean, you can't see this. Hold on. See this, a Wingstop? We called it out here, right? If you went up here, this thing went up to 69.92%, right? The problem is if you would have held it, it went down. Not because it's a bad business. It's just because it went ahead and reaches intrinsic value, right? What I'm trying to tell you is hedge funds most likely bought and sold up here, and then it recalibrated because hedge funds have to secure the win. So the problem is if you go in and if you willy-nilly just do a passive math, if you do a passive investing based off of this portfolio hedging modeling system, yeah, you won 26.17%. But if you carry a more active approach, doing an intrinsic value on all the stocks we call out and actually utilize level 1, level 2, and level 3 of the mastering part of the course and look at the fundamental analysis, calculate the intrinsic value, and then ultimately go in and look at the technical analysis, looking at support and resistance, and looking at options analysis to see if there's potentially a good opportunity to do covered calls and cash secured puts, then ultimately you can make a lot of money here, right? And we're going to do these analysis, okay? But despite the changes, we still perform better than the S&P 500, right? So now let's go and look at the year high analysis. So if you go to the year high analysis for the S&P 500, it goes from 23.31% to 28.6%, meaning that we went ahead and the S&P did better because you look at the year high. But look at a portfolio hedging modeling system's year high. It went up to 49.31%. So if you're able to basically pick the top of every stock, then our stock performed collection from the portfolio hedging modeling system, it performed 49.31%. And this is what hedge funds are trying to do. And the hedge funds that we derive from a portfolio hedging modeling system, we have a proprietary way of finding these stocks based on strategic legendary investors I look at and analyze their specific stock picks based on certain criteria, right? Which is why it performs so well, right? Well, you could see it's up 49.31%. Okay. So now let's go ahead and now let's do a buy the dip analysis. So pretend, let's say, for example, you went to do the low to high analysis and you bought the dip. So if you buy the dip for the S&P 500, it upgrades now from 23.31% by a passive way to 30.07%. But if you look at our portfolio hedging modeling system, low to high, you get a 64.60% return, which is insane, right? So there are 3 strategies here you could do. A passive approach, which then, this is incorrect. This is 23.31%. Sorry, I just wrote this, guys, right? So again, this is going to go into our annual report. I'm just sharing it with you, right? So the portfolio hedging gain was 20. This is in. Is this? Hold on, I got to go back here. 20. It was 26 point. Sorry, this is incorrect. Hold on. Yeah, guys. I mean, I'm building this here, right? It's just I got no help. I'm my own person here. Okay, so yeah. So then, if you were to do the math, then we should be on average be that, right? Let's just double check here because again, I need to make sure this is correct. 2.86, 26. Again, there it is. Yeah, 2.6% outperformance. And if you do the active approach like hedge funds do, then you would get 28% for the S&P and then 49% for the portfolio hedge with a 20% outperformance, right? And then if you do the buy the dip, you get 30% versus a 64%, which is a 34% outperformance. You can see it just it accelerates, right? And this is kind of the takeaway, right? So the passive approach, you would get 2.86%. Active approach is 20.71% outperformance, which is 7.24x improvement. And then the last part is a 12.0x improvement, right? So overall, so the question you have to ask yourself is, okay, Al, yes, you outperformed the market this year. What did the portfolio hedging modeling system do in 2023? Because this was 2024's performance. That's a good question. If you go ahead and do that, last year the S&P was up 27.19%. Our portfolio hedging modeling system was actually 35.07%. So we actually outperformed last year as well. And you can look at it here, right? So you can see portfolio hedging strategy. You can see that these were the stock picks that we had in 2023, right? And you could see that it outperformed pretty well, right? We had a 37% gain. So now let's go ahead and talk about our high conviction stocks. So if we were to go ahead and look at the 2023 high conviction stocks, we actually called SoFi out at $4.43. And then we actually stopped calling SoFi out at the beginning of the year, but we called it right back in the middle of the year of 2024, right? And this is proof to show you. On August 11, 2024, we actually recalled SoFi in $6.64. But again, this is our 2023 highest conviction stocks. And we actually outperformed the market because the S&P 500 average return was 23.31%, right? But, sorry, my apologies. This is for 2024 below. This above here is 2023. So in 2023, we actually got 91% return based off of the overall stock picks of SoFi, Palantir, Tesla, Clover, Enphase, and PayPal, right? These were our top stock picks, right? And I think PayPal was also one of the stock picks. And I think PayPal, we added it at $55.28. I didn't include it in this year's because I didn't talk about it too much, but it actually went up to 85. So if you were to look at it, PayPal has done really well, right? But it wasn't one of our top stock picks this year. But if you were to have looked at the analysis from 2023, it was actually, it's done pretty well. But overall, it went up 91%, ladies and gentlemen. And I just want to mention something really quick because I think this is kind of funny because Clover didn't do well in 2023, right? It brought our average down. If Clover would have done well, we would have been up 141% or 150%. Now, it's very funny because I went ahead and did this annual report, and I said this back in the day. I said that among these selections is Clover Health, which has demonstrated a modest year-to-date return of 7%. This is the 2023, right? And then I talk about looking ahead. We anticipate a significant inflow in small caps in 2024 and beyond, especially with the dovish Federal Reserve poised to decrease interest rates. We believe the economic climate will be particularly favorable for Clover Health, positioning it to capitalize on these trends. And you can see we said this in the end of 2023 for our prediction for the 2024 markets, and you can see we nailed it. We got it right. Let's do our analysis to see what our high conviction stocks performed this year. So this year, the S&P 500 did 23.31%. But guess what? Our high conviction stocks returned 401.85%. We got 4-bagger return. So let's see, what did we look at? What did we pick, right? So to answer this question, let me go ahead because for some reason I don't have the screenshot for the whatchamacallit. Let me make sure. Let me just get the screenshots for you here. So this was the first screenshot here. And then we did another analysis if we would have done 60 cents. We'll do this analysis here. This is just another one here. Okay, good. All right. So if you look at our high conviction stocks for 2024, we did a 401.85%, right? So what were the stocks that were high conviction this year? Well, we did Clover Health, right, which was 96 in the beginning of the year, which increased to 228%. We did Palantir Technologies, and we called that out at $6.96. Sorry, we called that at $6.96. Now, before people say, well, Al, when did you call it out at $6.96? Well, I called it out here, right, in January 15, 2023. And you can see from January 2023 until now, it went up 986.64%, right? Which is why we have an increase of 986.64%, right? SoFi, we went ahead and called it out again at $6.64. When did we do that? Here's the video, $6.64, calculating the intrinsic value of SoFi on August 11, 2024. The reason why, if you were to technically be honest, if we were to be honest in our calculation, we actually called SoFi out at $4.43 back before in 2023 and 2022. We called it out when it dropped to $4.43, but then it reached to a $10 and a half. And I said, you know what? That's it. That's a great 50% return, 50% return, back away, right? Again, not financial advice, but that's what I did, right? And then between that, the stock dropped down to $6, right? $6 and whatever in 64 cents. Then I said, this is becoming very appetizing. And then in the beginning of the year, I said, you know what? I decided that I'm going to add this to my high conviction list in August 11th, 2024. And again, you could go ahead and search our 700 videos. You can see it all adds up, right? And I basically am citing myself. We cited Palantir, we cited SoFi, and now we have to cite SoundHound. So SoundHound, we went ahead and called out at $5.50, and it's up 260.73%. When did we call out SoundHound? Well, we called it out here, October 20th, 2024. We called it out at $5.50, and now it went up as high as $23. But to be fair, it closed at the year end at $19.84. It reached our $20 price target, but then it went up to 260.73%. So our high conviction stocks went up to 401.85%. So you can see the returns, and I'm just very proud of what we're doing here, right? So this is our analysis. If we were to actually put Clover at 60 cents, which is when we were banging the table and when I did a lot of my buys, you got a 425% return. But to be fair, we just did this one, which dropped our rate of return from 401.85% when it should have been 450%. But it's okay. What is 450 versus 400%? It's still a four-bagger, right? And this is what I was saying here. So there it is, guys. And ultimately, this is pretty sexy, right? And I hope that this is a good method here that we basically talked about. Now we went ahead, talked about this. We cited this. Now let's go ahead and talk about the market analysis. Before we do that, I want to congratulate everyone who's joined our lifetime access. We still are running this coupon code. Take advantage. We will be increasing prices, and we are going to be getting to a point where once we get sufficient amount of successful people, we're getting folks that are professors in accounting, professors in finance. And the beautiful part is you don't have to be a professional in intrinsic value in the stock market to join our platform. We have people that don't have any experience, but they're learning. I mean, I just had someone today tell me, you know what, Al, I'm upgrading from the stock terminal subscription to lifetime access because I was here for a month and a half or whatever. And I learned, I said, I learned a lot by just listening to your guys' conversation. And that's the beautiful part about our platform, right? So for individuals that want to secure lifetime access, one-time payment, again, for folks that are in Canada and United States, we have Affirm. And for folks that are international, we have PayPal based on your credit score. We have every option. I try to make it any way possible to have people come in and be able to enjoy the beauty of our work, over 2.5 billion outputs of institutionally graded data, and our research and our portfolio hedging modeling system, right? So I'm just very excited just based off of the work that we've done. And you can see it takes a lot of analytical power and skill, and we have that now, right? So join us. Very excited to have you. To all the people that have joined, congratulations. Welcome to the family. And I'm very excited to see what you contribute to the community. Let me go ahead and see what goes on. I want CLOV to jump 30% institutional investors. I want 8K minimum new members during open enrollment. I don't usually get my way though. When will open enrollment numbers be? What's his name? Santiago's really good with that in Belize. Al, no one gives a shit. We know you're good. We know you're good. CLOV to the moon. Well, here's the thing, B-Rob. You have to. You have to record your stats, right? You have to, because this is for me too, so I can see where I messed up. Right, where I messed up, and for me to learn, right? So like, for example, if you were to look at 2023's portfolio hedging modeling system, we did 37%, right? But we didn't do the passive, active, and buy the dip simulation. I wish I did those calculations back in 2023. Always try to improve, right? Always, right? Is this the legend? B-Rob, he's a myth. The man, the myth, the legend. I love it. But yeah, so I really love the community we're making. It's just really beautiful, guys. And, it's all mathematically modeled. I mean, this guy's comment about, please, no one post anything about how great that you are going to accumulate now that we are under $1. This was 7 months ago, right? And if I were to look at 7 months ago, you know what? This was in June. Give me a moment. Give me a freaking moment. Actually, no. Wait a minute. We have it here. Let's see. June, and you can see right here, June, dumb money was here, and smart money started to buy, and then dumb money started to falter. But again, Clover didn't actually start going up until around the second half of June, and then we started slowly going up, right? And then it really exploded. But you can see that this guy's such a good indicator. Man, maybe I shouldn't have made this video. We should have just like stalked this guy's profile, and whatever he feels, it's like the chicken, right? It's like the canary in the cave, right? This guy, whenever he chickens and speaks, then we can get data from him. But it's okay. Again, we want to make sure everyone grows, right? So hopefully, this video maybe serves its purpose, right? All right, ladies and gentlemen, I hope this was a great educational video. I'm going to go swim. I am obviously so freaking excited for the future. Oh, no. I lied. You see, I was going to rip you off. I still got this. Okay. Give me a moment. Let me drink some coffee, because obviously I need some coffee. Hold on. All right. All right. Okay. All right. Market analysis 2024. And 2025 outlook. All right. So the problem is, guys, in 2024, we ended the year red. Okay. But we're still up 23.31%. The thing is, we still got 20% in 2023 and not 20% in 2024 plus, right? Which means that we got 20% back-to-back gains. If you were to look at 20% back-to-back gains, or just focus on 3 to 4 consecutive down days, you could see that in the next month to 12 months, we should be up. Again, the more bearish we are now, it gives us an opportunity to be bullish in the future. And that's based on previous performance. Again, which is not causation, right? It's a correlation. Smart money versus dumb money, you can see that ultimately smart money stepped back in, right? Which is good, because they know they know where we're headed, right? We're in a freaking, so looking ahead, the current market appears to be in early stages of a long-term secular bull market. We could be in a correction in the next 12 to 18 months, but we are definitely far from a bear market or a recession. Again, nothing's promised. No one can predict the future. If that's the case, I would have already been a billionaire by now, right? So January is expected to show strong rebound given the volatility that we've seen, right? But overall, I'm actually really bullish. In fact, I think the market may be up tomorrow. Again, I don't know. This is just a pure guess. But I think January, we're going to end green. I really do. Because December was terrible. Right? So I think January may be good, right? But again, who knows, right? So there it is. So overall, a lot of bullish news for the first day of January for Clover. We're starting to see that this actually graph that we went ahead and analyzed and did our proprietary way of calculating the bullish to bearish sentiment is actually true. We published just about 3 days ago. And now we are starting to see that, yes, this is true. This is a real trend. People are bullish about Clover, and this thing is soaring. And if you were to stack the stock price onto this, you would see some type of correlation effect. Again, guys, there's a lot of analysis that's done here, okay? Chamath hates me. Chamath hates me. You know why Chamath hates me? Because I'm putting a lot of light on this company. We're analyzing this company with no emotion, right? And again, he's speaking to someone who's going to have 5 degrees, and my analytical research is like nobody else, right? My analysis is strong, right? So come at me, Chamath, right? Come at me, right? So, but the point is we want to democratize this type of information because it is not fair that the little guy loses money, right? Because people like to buy high and sell low, but we like to do it the opposite way. We like to do it the Warren Buffett way, right? Ladies and gentlemen, God bless you. Happy New Year, and I'll see you on the next one. For all the folks who are interested, take advantage of this before this is discontinued and we increase prices. God bless you all. I'll see you on the next one.